Folks, sorry I'm late. I apologize. The show prep for tonight's show was quite extensive. I had to change it up a bunch of times because of new events, new items that were unfolding, and we have a lot to go over here. So I'm going to get right into it. I'm going to share my screen, and we're going to talk about the opening futures action. Okay, so we have the S&P 500 of the futures market open in general, and we have a gap up. This looks like it should be higher on a percentage basis than just spot 0.1%. What am I missing here? I'm not getting, something's off here. Something is off here with the futures action. Now we're showing it's flat. This looks like a gap up. There's something wrong with how they're oh, I know what they're doing. I know what they're doing. They're calculating it off of the open relative to where it is at current. So there is a gap up. What the percentage is, I have no idea. They're not showing it accurately. They're not showing it relative to the close on Friday, but we do have a gap up. Let's bring up CNBC really quick. I hate when they do this. Markets. It's actually right. I'm not understanding this gap up here, and the fact that we're showing is flat. I'm not getting it, but we are flat according to CNBC and according to Thinkorswim. But all right, something's off here. Nasdaq 100 also so-called flat, but with a big gap up. I mean, this is a 30-minute chart. That's a big gap up to me. But it's showing we're only up spot 0.02%. Something's off. Let's go to the Dow. Dow is showing is down, although it's gapped up. I don't know. Something's off here. I know Thinkorswim was down for the weekend. I may have taken my settings off. Let's take a look at the dollar. The dollar is a gap down, but I guess what they'll call that. I guess they'll call that flat as well. But there's a gap down on the dollar here, so we'll see how responsive gold is to that. But first, let's take a look at the euro. The euro did not close out the week well last week, but we're showing a gap up. We're fading off the highs of the session. Taking a look at yen. Yen also did not have a good week last week, but looks like they're getting some short covering rally. We are up measurably, about a half percentage point. This makes sense. This gap up, this percentage gain, that makes sense. Let's check back in with the futures. Let's go to the minis on the Nasdaq 100. No, showing the same thing here. Very strange. Let's check out yields and what they're doing. Yields are pressing up higher. This is the 10-year yield. Let's check out gold. Gold is actually down on a stronger US dollar. That leads me to believe that gold traders are not believing that this pullback on the dollar is going to last. Let's check out silver. Silver is up, but it had a very, very bad week last week. I think ultimately this presses lower, assuming that the dollar regains its footing and rallies. I definitely want to take a look at oil. Oil is going to be a big conversation that we're going to have here tonight. Light sweet crude is actually down. This is an outside reversal bar. We could have a significant move lower here. This is a 30-minute chart of light sweet crude, and we are seeing a TTM squeeze. When these dots turn red, that means that the Bollinger Bands on a 30-minute time frame are trading within the Keltner channels. And that means you're going to get an explosive move to the upside or to the downside. It's anyone's guess which way it goes, but it looks like this is getting resolved to the downside. The last time we saw this type of price action, it was resolved to the upside. Generally, it does get resolved to the upside, but this time it does not appear to be working out that way, at least in the short term, for oil traders. Now, I think that this is going to be an opportunity to buy oil, but not right now. Let's check in with Nat Gas. Nat Gas also taking it on the chin here. Another TTM squeeze getting resolved to the downside, 30-minute time frame. And you're seeing a bunch of these in the equity markets as well. I mean, you take a look at Amazon. TTM squeeze, 30-minute time frame. The weekly chart looks really good. Several weeks of consolidation after strong earnings. If this gets resolved to the downside, that's going to be a problem for the equity markets because it's going to be a ruthless sell-off, at least you're looking at a 30-minute chart. So put it in the context of a very short-term, multi-day sell-off, if that. Same thing holds true for Meta. Meta had a TTM squeeze back here, burst, pulled back, and now has broken down below support. So really no big gains off of this TTM squeeze on Meta. Now getting back to the futures action, let's switch over to a weekly chart to take a look at agriculture. Start off with corn. Corn had an up week, but no breakout as of yet. Firming up, lots of consolidation here. Soybeans, lots of consolidation, no breakout. In fact, we had a retest of a breakdown point from the prior week. Not looking good here on soybeans, but we could just be in a consolidation range, but I would not be a buyer at current. Wheat, not a good week last week. TTM squeeze started firing off back here. We burst up higher, then it reversed. Bad stuff. Wheat under pressure. Now, it wouldn't be a Sunday night if I didn't check in with my live cattle futures to see how expensive next week my New York strip is going to be when I go out. I did have a very, very good steak free on Friday night. Very, very good. Cooked perfectly. A little bit of pesto on top. Thought a little bit odd to have pesto on top, but it worked. What is live cattle futures again? I forget the symbol. It looks like I'm not going to get my way. I'll lose half my audience waiting here. Hogs, gold, cattle. Here we go. What's the symbol? LE. Oh, they reversed it last week. Gosh darn it. Gosh darn it. It's going up higher. At resistance anyway. Okay. Let's check back in with the futures action here. Dollar really dipping lower. NASDAQ 100 up top here. It's saying it's up only spot 0.6%. Okay. Okay. VIX is up as well. Very interesting. We have volatility up. 10-year yield is still up, but it's reversing off of its highs. That's the futures action. Let's check in with comments. All right. Looking forward to it. Thank you, Seymour Rivers. Sean, welcome. Franklin, hey. Yeah, it was a very, very nice weekend. I did a detox day today. Just relaxed and drank my Acqua Pania, my favorite Italian mineral water. Okay. It's a roll, no gap. It's a roll, no gap. What do you mean by that? Educate me. Jeffrey, welcome. Oh, they rolled the contracts. Yeah, I got you. Gotcha. Thank you. I thought I was losing my mind. Okay, now it makes sense. That's right. We went from the we went to the next contract. Thank you. Thank you. Perfect. Thank you for that. Thanks, Jeff. Okay. Yodi, the markets are broken. Well, we're getting there. Bob, have you had a chance to take a look at the new? I did. Yeah, I watched the video today. I spent a lot of time doing that. It looks interesting. I'm still trying to figure it out, how best to work the settings on it. Okay. Beautiful weather and market analysis. Big thanks to Bob Smash. Yeah, please. Thanks. Hey, Talon, thank you. Yeah, if you could please hit that like, subscribe button, and notification bell as well. Dan, welcome. Mr. Pete, welcome. TF out of China will close on Friday due to weather. Maybe a connection. Paul, welcome. TZ Burton, awesome. Have a nice welcome. Nice to have you here. APLS and TARS. Okay. Bob, TrendSpider has a special out. You may want to cover it since it's just $250 for the first year. Wow. But ends September the 10th. Use GOE9. Guys, use the link below. Thank you, Franklin. Use the link below. It'll take you over there. I'm an affiliate for them. So please help out the channel and use that discount code. Don't use my discount code. Use their discount code. Thank you, Franklin, for that. I didn't know about that. TF Hatter from earlier, China. Biden speaks to China's Li at G20, says economic crisis makes Taiwan invasion less like. We're going to talk about Biden a little bit. Trader Isaac, welcome. For the most part, it's a work in progress. Trader Isaac, I'm looking for feedback. There's only so much time that I could do both members content and free content. I only have so much time. So I would love to do both a technical analysis live stream and an options live stream. I'm trying to figure it out. That's why I've been inconsistent with when I'm going to do these live streams. I want to do them quality wise. I'm working through it. If you have comments, leave me a comment. I'm listening to them. Jody was on. She gave me feedback. Uh, Mostly it's geared towards my business has changed. It's changed, and it's more geared now towards cash flow strategies and generating wealth through options. Yes, I do still like to swing trade equities. It's still a part of our business, but consistency and uh, reducing risk is a growing piece of my business. I don't like all too much overnight volatility. Therefore, options work for me best, and it's working out for members as well. So, if you have comments, you have suggestions, please give me all of it, and I'll take it into consideration. Believe me, I'm looking for guidance. How about an account for non-options trades? Elaborate on that. What do you mean for the premiums, like joining the contrarian trader? Because right now they're combined. So elaborate more on that if you would. Thank you for the comment, though. Tell them I usually pay no attention to Wellington, but they added 40% in 4 funds. Makes me wonder about something will happen to APLS. Okay. Uh, Google, I believe, is the largest company in the world by far, surely. Uh, they got a long way to go. Saudi Aramco is the most profitable, and Apple is still by far the largest. Seymour Rivers, thank you, sir. Speak, Tom. Speak Google. All companies' managers should be paid in its way. Let management work their butts off. There you go. A meritocracy. Okay. All right. Let's let's get to it. I have a lot to go over. So I want to begin with Muhammad El Arian. This came out late this afternoon. Again, I switched up the beginning of the show like 3 times, and when I saw this, I always watch what he has to say. He's very influential, and he's in the know. And if he's speaking, you listen. An important shift in Fed officials' rate stance is underway. Central bank is likely to pause rate increases in September, then take a harder look at whether more are needed. This is behind a paywall for the rest of the articles on the Wall Street Journal if you're so inclined to take a look at it. So I'm not shocked by this. And we're going to go over a bunch of reasons why they may do this, but they're going to unleash the hounds of inflation on this economy. Have no doubt about it. And we're going to talk about that in quite a bit of detail. Now, coming out this week, we have the Apple iPhone release event. I'm going to talk about that more in a moment. We're going to have August CPI inflation data, important. We're going to have PPI, that's the producer price index. So this is the consumer price index. This is the producer price index. We're going to get retail sales on Thursday. We have a Fed meeting this week. They're going to announce on Wednesday. They have a conference call afterward. No Fed meeting next month. So this is going to have to carry us 2 months. New York Fed manufacturing data coming out. So there is a lot going on this week. So buckle up for volatility. Now, the iPhone release set for this week, I don't think is going to be met well. I'm going to go over the chart of Apple. It's one of our requests from one of our members, our new members, as a matter of fact. We're going to be going over Apple's chart in a little bit. It does not look good for Apple. And I warned about this a few days ago that Tim Cook has done a great job of steering the company towards big time profitability on the heels of the iPhone. This next iteration of the iPhone is set to become an extremely expensive device and not a bunch of new features. And what they're doing is supposedly they're jacking up the price to pay for the transfer out of China and into other areas. And China is also being capped as a market to them because they're not allowing government officials, state-owned enterprises to have iPhones now. So that's going to be a problem for Apple. And you can only expect this to get worse because we're in economic war with China. It began many years ago. It's now becoming more and more aggressive. So perhaps in the years to come, Apple, which is moving a lot of its manufacturing over to India, as their middle class builds out, they'll be able to afford iPhones. That market is 90% Android. It's a very, very poor economy. So they're not going to be able to pick up huge market share there right away. They need to build out that middle class. So Apple has a lot of problems ahead of it. And I don't think that the market is going to welcome this new release with all that much fanfare. This is not the iPod. This is not the new iPhone. It is not the, what do you call it? The touch iPad. What's the new app? The goggles? They're $3,000 or something like that. So good luck with that. See what that did for Meta. Now, the reason why I'm speaking about this is that this is one of the largest components of the triple Qs. Right now, I'm going to go to a chart in a moment. The triple Qs are keeping this market up. Earnings coming out this week. Oracle on Monday. Not much beyond that. Adobe on Thursday. Other than that, earnings season by and large is coming to an end. Here's where things get a little bit more serious tonight. And it's not going to be for those that are get politically triggered, you're not going to like this too much tonight, so I'll have to deal with that. So this is tweeted by the president of El Salvador. El Salvador, remember now, uses as legal tender Bitcoin. They recognize it as legal tender. So the president of El Salvador putting Joe Biden on blast Twitter. The most powerful country in the world is falling so fast that it makes you rethink what are the real reasons. Something so big and powerful can be destroyed so quickly unless the enemy comes from within. Powerful words, but also very truthful. And here is what is leading this magnificent country at this point in time in our history. Let's take a listen. I have a couple of videos I'm going to be playing tonight.
We talked about at the conference overall. We talked about stability. We talked about making sure that the third world, the southern hemisphere had access to change it, had access. It wasn't confrontational at all.
Thank you, everybody. This ends the press conference. Thanks, everyone.
Thank you.
Okay, so that was one of his underlings, a staffer, that cut off the president of the United States. Again, this is not the first time this has happened. So this continues, this twilight zone of a presidency continues. I'll share this. I see some reactions out there. I'll share this out. I just dropped that into the chat box. So this article off of Zero Hedge, Twilight for the Democrats. And I don't like this. I don't like this headline. And for those of you that are Democrats or liberal, don't get mad at me. All right. I can't stand either party. I just can't stand the Democrats more. So the twilight for the Democrats. And we just could scroll down here. Due to the president's age and obvious cognitive decline, it is unclear who is actually running the country. Again, it is unclear who's actually running the country and calling the shots. Biden, a corrupt and disoriented old man controlled by shadowy figures behind the scenes, is emblematic of what the Democratic Party has become. It's not just the Democratic Party. It is the Republican Party. Mitch McConnell has had 2 freeze-ups during press conferences over the past 2 months. He had to go in for stroke testing. They say he's okay. He's not okay. You have Dianne Feinstein, a senator, one of 50 senators out of California, She can't utter a sentence. If you allow the government to break the law because of an emergency, they will always create an emergency to break the law. Again, if you allow the government to break the law because of an emergency, they will always create an emergency to break the law. This is the cycle we find ourselves in. COVID worked like a charm for these people. And the Democratic Party is the party in power at current. But absent a big steal, they're going to be shown the exit door, and they are afraid of going straight to effing jail. Pardon the terminology, the family-friendly show, but they are afraid. It probably won't happen because the Republican Party has no backbone. Even if Trump gets back in, he never prosecuted Hillary Clinton. He should have. I'm no advocate without any type of remorse towards Donald Trump. I think that he messed up. He should have had her prosecuted. She should have gone straight to jail. Will they have the backbone to send these treasonous villains to jail, prosecute them? I don't know. But in their minds, the risk is too much. It's greater than 50-50, and those odds are way out of whack for them, and they will do anything right now to seize the reins or retain the reins of power. Fast forward to this morning. New Mexico lawmaker calls for governor's impeachment over 2A overreach, Second Amendment overreach. So New Mexico state representatives, blah, 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 are called for impeaching the governor, Michelle, whatever her name is, Grisham, after she issued a public health emergency. Remember this. Emergency to strip away the rights of law-abiding citizens to carry firearms in public around Albuquerque, the state's largest city. They have a open carry law over there, I guess. And because there were a couple of killings, I guess, I'm not all that familiar with New Mexico, but apparently because there were some killings, she has ordered that law-abiding citizens cannot have open carry for the next 30 days or whenever she decides to rescind this emergency. And I guess she's got the power to extend it out. So here is her rationale. I couldn't listen to all of this, but here's all you need to listen to. Here we go.
Should do something. I'm doing as much as I know to do.
Madam Governor, do you really think that criminals are going to hear this message and not carry a gun in Albuquerque on the streets for 30 days?
No. But here's what I do think. It's a pretty resounding message.
She's either a communist or she is one of the stupidest people on the face of the earth. Unfortunately, I think she's a communist. And she's doing exactly what she's being told to do by the puppets that are in Washington. They want these guns because the COVID crisis is back until it rebrands itself into something else. As we go into 2024, they are going to ramp up. I don't know what it's going to be, the climate crisis, COVID crisis. Who knows? Maybe it's the cupcake crisis. I have no idea. But there is something going to come down the road that is going to be so overreaching. They will declare state of emergency. Will they have a next election? I don't know. I'm going that far. I'm putting myself out there. So I'm very, very worried about what's going on in this country right now, as I'm sure everyone else is out there. A lot of people are waking up. It's great to see. The question is it too late? And here's where we get to, these are the signals that continue to repeat themselves time and time again. Now, this guy here, Frederick Mishkin, resigned from the Federal Reserve August the 31st, 2008 to take up a position at Columbia University 4 months early. Now, last month, we had Jim Bullard resigns from the Fed tomorrow, August the 14th, taking up a dean position at Purdue University a full 4 months before his term expires. Here's what Mishkin had to say
and that
at the time when
in
he
August of 2008.
resigned.
Were you aware of the credit ratings held then by Lehman Brothers, Merrill Lynch, AIG, and did you think that they were accurate?
Pardon me, this is after he resigned, after the Lehman crash, after Bear Stearns crash.
Well, certainly by that time, it was always clear that earlier credit ratings weren't accurate because they had been downgraded substantially.
No, they hadn't.
There was still some downgrading in terms of the industry and concerns, and certainly the stock
Not
price.
some. All those firms were rated at least A2 until a couple of days before they were rescued.
Well, then then the answer is I just don't know enough to really answer your question on this particular issue.
Governor Fred Mishkin is resigning effective August 31. He says he plans to return to his teaching post at Columbia's Graduate School of Business.
Why did you leave the Federal Reserve in August of 2008? In the middle of the worst financial crisis.
I had to revise a textbook.
His departure leaves the Fed board with 3 of its 7 seats vacant, just when the economy needs it most.
Well, I'm sure your textbook is important and widely read, but in August of 2008, some somewhat more important things were going on in the world, don't you think?
By Friday, September 12th, Lehman Brothers had run out of cash, and the entire investment banking industry was sinking fast. The stability of the global financial system was in jeopardy. That weekend, Henry Paulson and Timothy Geithner, president of the New York Federal Reserve, called an emergency meeting with the CEOs of the major banks in an effort to rescue Lehman. But Lehman wasn't alone. Merrill Lynch, another major investment bank, was also on the brink of failure. And that Sunday, it was acquired by Bank of America. The only bank interested in buying Lehman was the British firm Barclays. But British regulators demanded a financial guarantee from the US government. Paulson refused.
We all jumped into a yellow cab and went down to the Federal Reserve Bank. They wanted the bankruptcy case commenced before midnight of September 14. We kept pressing that this would be a terrible event.
So the question is, what did this guy know? And what does Bullard know? What was his true intent, or what was the reason why he was leaving for academia yet again with more time and 4 months left in his term before it expired? Could it be the fact that we have credit card delinquencies at all-time record highs? All-time record highs. We have 2-year Treasury yield is approaching highs not seen since 2007. We all know what happened in 2007. That was the financial crisis. Could it be demand for commercial real estate loans is now at 2008 lows? That was at the end of the financial crisis. Demand for CRE loans, commercial real estate loans, is even below 2020 lows when the global economy was in lockdown. Office building prices are down 30%. Who holds that paper? The regional banks. Over the last year, the apartments are down 15%. These are the same loans that are set to see interest rates more than double when refinancing. Think about that. The value of these properties is down, and when they go to refinance these properties, and they all have loans, they're going to need to double their payments. We are in the CRE crisis, and the housing market strength is hiding it. No doubt about it. And there's the picture. Is that what he's worried about? Could it be the fact that the valuation of the market, the fact that you have the NASDAQ 100, technology stocks are literally carrying the entire stock market. The NASDAQ 100 to Russell 2000 ratio just hit an all-time record of 3 times that of the Russell 2000. Even in the 2001 dot-com bubble crisis, this ratio peaked at 8.1. At the start of 2020, The NASDAQ 100 to Russell 2000 ratio was just 5.1 times. Markets really believe AI is the next big thing. So history repeats itself yet again. So we all know what happened back in 2000. That was the dot-com peak, March 2000. I remember it very, very unfondly. I did not escape that one. Could it be also the fact that he's seeing the yield curve, Bullard? Is he seeing the yield curve steepen? And on a quarterly time frame, with now just 20 days left to go, on a quarterly time frame, we have a major breakout on the yield curve. The yield curve steepening. For those folks not familiar with what the yield curve is, it is predicted every single recession since 1955. And you could see what happens. S&P 500 is in gray. Yield curve, when the yield curve steepens, S&P 500 rolls over each and every time. The last 4 times, the 10-year minus the 3-year Treasury yield curve inverted. It led to the 1990s recession, the dot-com bust, and the global financial crisis and the 2020 recession. This is just another view of the yield curve. I use 2s versus 10s. He's using 10s minus 3s. It's all very similar. It's happening, folks. It's happening. We're at the very early stages of something occurring. Can you rule out a blow off top in this market? No, you can't rule that out. But it doesn't look good. It does not look good. Could it be also that Bullard is worried about the decline in global liquidity? You must have liquidity. Remember, we are a debt-driven global economy. You take that money away, you take the punch bowl away from the drunks, things get real quick, and the hangover ensues. Global liquidity has fallen by $1 trillion over the last, not year, not 10 years, but 10 weeks. Perhaps another reason that rates are rising as risk assets wobble more. Take a look at how the 10-year yield closed out the week last week. It was not stellar. Let's get another view. This is not the one I want. Hold on. All we're doing right now is I have it on the TNX. This will work. What we're doing here is we are simply consolidating after a breakout. Last week, technically, another way to look at this is this way. Here, this is what happened last week. There you go. We got overbought. We pulled back. We broke out. That's a continuation move up higher on the 10-year yield. Very, very bullish. Yields want to go higher. This is interesting. This is, again, goes back to the consumer.
I would argue at least 50% of the market. I would argue at least 50% of the market is almost completely priced out of being able to buy the way that they traditionally would.
Wait, so what do you mean by that? 50% of the market is priced out of the car industry?
I mean, at the end of the day, if you think about retail, the retail vehicle market, it is a financing market. People, the most important number is the monthly payment. And when you look at what the households in the U.S., the distribution of their incomes, about half can only afford about a $400 payment. And it is really difficult to produce a $400 payment in either the new or the used market today because of the combination of vehicle prices and interest rates. I would argue at least 50% of the market is.
So this is a glaring view of the health of the consumer in the United States. And oddly enough, the consumer discretionary sector is holding up fairly well. But these are storm clouds that are quantifiable. It's not hyperbole. It is not anecdotal evidence that we have here. This is all measurable, quantifiable, and these are problems that are going to have to be dealt with. And this is why I said earlier about the article that Mohammed Al-Aryan tweeted about could quite possibly be the truth, because it's going to have to be a decision between the Federal Reserve allowing for inflation to run up higher or allow for yields to pull back so that they could salvage the regional banks, the banking system, and the commercial real estate system. Somebody has to lose. Either way, it's going to be us. Either we're going to lose through inflation, or we're going to lose through taxation due to the fact that we're going to have to bail out these institutions to try to salvage the banking system. Now, the Federal Reserve has made it clear they won't bail out, and they didn't bail out these institutions back in March, but they did bail out the depositors in excess of the FDIC insurance, which wasn't charging enough to cover the $250,000 they were obligated to cover anyway. But now they're not even collecting enough premium to cover the $250K, yet they're going to have to bail out the depositors for in excess of $250,000. This is a banana republic. This is crony capitalism. This is crony capitalism at its worst. And I don't want to see people lose their money, but this is a capitalistic society. So you just heard what this guy had to say about the payments on these cars. But why are these cars so expensive? They're expensive because the technology that's going into them. They're expensive because the EV market is being forced upon us in the name of the gods of climate change. And here's the irony about the EV market. This is a picture of electric car. Unless this is a meme, please somebody educate me here. I don't think it is. This is a picture of electric car charging station that are popping up everywhere. Here's an interesting fact. That 350 kilowatt generator uses 12 gallons of diesel fuel per hour, and it takes 3 hours to fully charge a car to get 200 miles. That's 36 gallons for 200 miles. 5.6 miles per gallon, proof that this can't fix stupid. That doesn't add into the fact that the industrial output, the industrial CO2 emissions to create one of these cars, it takes 5 years of one of these cars, not including this ridiculousness, in a perfect world environment, that these cars pay back what they've already stolen out of CO2 emissions into the environment. So ultimately, this is going to be the poster child for the EV market. I do not see this as being the next new big idea. And all the while, as the energy crisis worsens with West Texas Intermediate crude, Brent crude threatening to break out, light sweet crude threatening to move up towards $100 a barrel, you just had the Saudis cut production, the Russians cut production. Who is Biden working for under fire for illegal, reckless cancellation of Alaska oil leases? He has shut down Alaskan oil pumping. Talk about being in a forest loaded with tinder that hasn't been cleaned up, like California for all these years, and just taking a match and setting it ablaze. So unconscionable what he is doing. Add to that the strategic petroleum reserves hit lows not seen since 1985. We've spoken about this before. as Biden drains it to hide inflation. Think about where oil prices would be if he didn't dump all of these millions upon millions of barrels out of the Strategic Petroleum Reserve. Inflation would be measurably higher. Meanwhile, China builds its reserve because they're not run by a moron. Add to this, Russia is set to slash diesel exports in September. But what are we doing? Our EVs are running on diesel-powered generators. So when Russia cuts diesel exports, and it will impact us, it's a global economy. Even though there's a ban on Russian fuel, it's going to drive up diesel here, especially since we're not going to produce as much oil to convert into diesel because Biden has shut down Alaska. What is that going to do to inflation? It's going to send it through the roof. Why? Trucks run on diesel. So the cost, because many people are out there saying, wait a minute, don't go by that, Bob. I talk about this all the time. Don't go by the fact that that energy is going to go up, because the Federal Reserve doesn't pay attention to that. They back out food and energy. We talk about this all the time. At the core, you're also going to have inflation due to the rise in trucking costs. Trucking companies aren't going to pay for it. The retailers aren't going to pay for it. The manufacturers aren't going to pay for it. We are going to pay for it. And it's going to be reflected into the CPI. Yet, the Federal Reserve may be planning on now pausing on interest rate increases as the fear of inflation only gets set to rise. And he's not doubling down yet again on reducing the Strategic Petroleum Reserve to keep a lid on oil prices because there's not enough left to do it. How are the Chinese doing? Well, the Chinese are doing just fine and dandy. The Chinese imports for Iranian oil soared to near record highs in clear breach of the U.S. sanctions. Who does this guy work for? Let's do some chart requests. Let's go to some comments first. I can't watch a speech again. I know it's brutal. Tazy Wazy, I love your name. Who knew the cupcake prices would finally destroy the Constitution? Yes, I'm claiming that. Copyright protected. Where were you during the cupcake crisis? Very good. Talon. Huntington Beach, California passed a no vax, no mask mandate this week. So they what does that mean? They're saying no vaccines and no mask mandate, or they're doing the bad stuff? They're saying you got to have a vaccine, you got to have a mask. Are they doing the right thing or the wrong thing? Great segment on the Fed, QQQ, and CRE leading up to another huge bear market. Thank you, Jeffrey. Tony, like, I know about the rollover gap, but I don't understand it. I'm with you. All a part of the greater pan. Bad word, the losers. Unfortunately, we are. We're the suckers. MAGA extremists caused inflation. Everyone knows that. Biden says so. Very, very true. How dare you, MAGA extremists? You patriots, you. All right, let's do some chart requests and call it a night. I'm probably over already. Oh, no, I'm not. We covered a lot. All right, let's do this. One of our newest members today already has me working. You can see I was playing with that chat's new feature here on TrendSpider. And folks, don't forget, if you're just joining in, use the link below. Go over to TrendSpider. They're having a huge special over there. And I'll pop it up here. Franklin was good enough to share this. TrendSpider has a special out. You might want to cover it. It's just $250 for the first year, but ends September the 10th. That's tonight. Use this discount code. Don't use mine below. Use the link below to get there. Don't use my code. Use this code instead. Get the better discount. All right, I'm going to take this off. I'm not completely familiar with it yet, but I was playing with it. Okay, Apple is the first one up. Okay. Let's begin. We're going to begin with a weekly view. I don't like this chart at all. I think that we are threatening a breakdown. We may have a double top here. And if we close down below 174 per share, it's all over for Apple. It's going to go a lot lower. So if Apple goes, you should expect to see that the triple Qs are going to follow soon thereafter. Daily view. We do have some support immediately below at 177.45. They'll probably bounce it tomorrow off of that in advance of the announcement on Tuesday, I believe it is. But I'm not a buyer of these shares. I don't like it. And I think that ultimately this gets resolved to the downside 4-hour chart. You can see how they sold it off Friday afternoon. They gapped it down on Friday. They reversed it back off of its lows. Couldn't even fill the gap, and they sold it off into the close. I don't like Apple. Relative weakness here. I would avoid this. And I would short it on a close below. On a close below 174, I would start leaning in short on Apple. But I wouldn't go leaning in more on Apple short until the Qs began to roll over as well. APLS. They are rebelling again. Good for them. Power to the people. Good stuff. Live Oak Bank is one of the largest lender of small businesses. I have a considerable amount of savings with them. It's my life savings. Be careful. That's all I can say. You know, that one bank that was out of San Francisco, the reason why they bailed out the multi-million-dollar depositors is that they're donors to the Democratic Party. Thank you, Sean. All right. APLS, Apellis Pharmaceuticals. Nice rally back here. We broke a little bit of support last week, the uptrend channel, but this is unsustainable. I would see a pullback to, let's see whether or not I don't have my trend lines up here. There we go. Good. A pullback to $38.76 would be interesting to me. A pullback to $35.34 would be very, very interesting because you have two pretty good volume shelves here, in particular at that $35 per share mark. So I think that Apellis is probably going to pull back further here. The daily chart doesn't look bad. I mean, you could argue that what we're going to do here is break out. So if it manages to break out and close above 43.75, you may want to put on a long trade. Just keep a tight stop loss order. It's a good-looking daily chart. It's the weekly chart that has me a little bit concerned because we've come so far so fast and that we need to consolidate these gains. TARS. Taris Pharmaceuticals. Avoid this. Weekly chart. Head and shoulders setup. Left shoulder, head, right shoulder. Neckline broken. This wants to go lower. Daily view. Avoid, avoid, avoid. Even though you had a reversal day on Friday, I think this is an effort to try to recapture support. It will probably get rejected. I would avoid this. I think it goes lower, longer term. Why does Dish so cheap when a company for 3/4 of total profits of the year 2000? No idea. I'm not a fundamental guy, Michael. I'm the wrong guy to ask. All right, folks. That's about it. If there are no other requests, Mitch, you can check back in the members area. I will call it a night with you. And folks, don't forget, please, to click that like button, subscribe button. Don't forget about the TrendSpider offer immediately below. Use that link, $250 for the first year. Pretty awesome stuff. Automated technical analysis. They are always adding new features on here. And I will be doing a video sometime this week about the TTM squeeze and a trade that I like. So check back in, like, subscribe, and don't forget about 14-day free trial offer. Folks, have a profitable trading week. Jeffrey, thank you very, very much for the kind comment. Sean, have a great night. Do you have an idea why food companies hit new lows each week? It's a risk-on environment. That's why. It's a risk-on environment. You're welcome, Dan. Anytime. Jeffrey, again, thank you. Tazy Ways, thanks for your great content. You're a great person. Thank you very much. I really, really appreciate that. Tony, out, man. Have a great night. Franklin, I'll talk to you tomorrow. I have an email out to Dan over at TrendSpider about your question. So expect, he's pretty good with getting back to me. He may even get back to me tonight. So more to come on your question about the TrendSpider chart. Folks, have an awesome night. Profitable trading week. Talk to you soon. Be well.